In this timeline, we report statement of profit loss for the period starting from opening date ending on the reporting date. Whereas the balance sheet or statement of financial position is reported on the reporting date, whatever the age that entity carries. So that reporting date is termed as present resource, present obligation. So when I say present resource, it means the resource means the asset on the reporting date. Whenever I am preparing financial statements, but the present will be defined as 30th June 2025 or 31st December 2025 whatsoever. So present means the date on which we are reporting. So now read the definition of liability. Present obligation. Obligation existing on the reporting date. Okay. What is obligation? Obligation means the entity is obliged to pay resources to the third party. I'm saying third party. I did not say the second party. Because second party is the owners. An entity is never obliged to pay to the owners the contributed capital. That's why owner's equity is not a liability. Again, there is a wrong perception that owner's equity is a liability payable to the owner. Wrong. Owner's equity is not a liability because on reporting date it is not my obligation to return the funds to the owners. Okay? Let me take you through a few important things. Recognition. What comes in your mind when we say recognition? It's a very simple thing. Recognition means to do debit and credit on the voucher. Now, electronically, the vouchers are prepared electronically. What we do, we simply open up the voucher area in the software and we select the correct code of accounting head. So the correct code of accounting, selecting the correct code of accounting head is recognition for the debit or for the credit. Simply, it is the definition of recognition. To select the correct head of account for debit and correct head of account for credit. The next thing is measurement. The measurement is to give value to the voucher, the debit and credit you did in the voucher, what the value you will give to that. When we say value, value means value could be the value on the transaction date or on the reporting date. Now feel the difference. Two dates I'm saying, transaction date or reporting date. Transaction date is the date when that financial information was originated for the first time for the entity. Like you bought machinery 3 years ago. So that was its measurement or the value on the transaction date. But on the reporting date, which is present, the value of the machinery is different as to its fair value or replacement cost or the present value. So here you see, let me take you to the presentation mode. Okay. Okay. So what you see, the value that we have on the transaction date is the historical cost, and the value that we have on the reporting date is the current value, in fact, in the language of the standard. And this can be determined either as a fair value or value in use or current value. Now let me give you a very simple example. Supposedly you are having only one asset in your business, and that is a car, and your business is rent a car. You bought that car 3 years ago, supposedly for 100,000 dirham, and you estimated that its life would be 10 years, and for the sake of ease I'm assuming as if its residual value would be 0. Since it's a 3 years old car, you will say its net book value is 70,000 dirham. 100,000 minus 30,000 accumulated depreciation, net book value is 70,000 dirham. It's a net book value. This net book value is representing the value on the transaction date. But if the same car I'm supposed to put in the balance sheet at fair value, what I'll do on the reporting date, I'll go to the market and see at which price I can sell this car. So the price at which the asset is sold or can be sold is fair value. Say that is 55,000 today. So that would be its fair value. Fair value is the price at which the asset can be sold. I say, okay, let's check its replacement cost. Replacement cost means the price on the reporting date at which the same asset can be bought. Say it is 62,000. So what is the historical cost of that asset? 70,000, which is the remainder of the 100 minus accumulated depreciation. That is the historical cost, 70,000. What is the fair value? 50,000 or 55, what we said? 55,000. And what is the replacement cost? 62,000, at which we can buy the same asset. Now, the present value. Present value is always determined for the cash flows, future cash flows, remember. I'm estimating that I can use that car for rental purposes as a rent-a-car, and it will be fetching future cash flows to my business, the discounted cash flow of which at market discount rate is supposedly 80,000. You know what is discounted cash flow? No. Present value? No. Leave it. Let me tell you. Don't get sad. I'm having future cash flow. Like that car will be given to the customers on rental. They will give me cash that I will receive after a year. Supposedly I have only one client to whom that I have given that car on rental, and each year at the end of the year he will pay me supposedly 5,000 dirham. Each year he will pay me 5,000 dirham at the end of each year. Now you tell me, say if the remaining life is supposedly, okay, let's make it 10,000 dirham. If the remaining life is 7,000, so what I do, I'll be receiving 70,000 in the future. At the end of each year, I'll be receiving 70,000, 10,000, 10,000, 10,000, 10,000. So future cash flow is 10,000. I'll make it very easy to understand if you just put very few minutes concentration. It will become very easy. Had you been received 10,000 today, you would have earned interest on that 10,000 from the bank, or you would have invested that 10,000 in your business and your business would have made a profit. So after 1 year, that 10,000 would have been equal to supposedly 12,000. So in a way, that 10,000 that you are receiving after 1 year is not equal to 10,000 today, rather it is lesser than that 10,000 today. Because supposedly 8,000. Had that been 8,000 today, you would have made a profit of 2,000 on that 8,000 to make it equal to 10,000 after a year. So the 10,000 that you receive after 7 years is not equal to 10,000 today. So what you will do, you will calculate its present value, discount it down, discount it down, discount it down at each year, so that today it will be much lower value as compared to the actual cash flow that you would be receiving after 7 years, after 6 years, after 5 years, after 4 years, after 3 years, after 2 years, after a year. If I just give you a tip, what you do in leasing, you calculate present value. What you do in defined benefit plan, liability, you calculate present value. Okay. What you do in your syllabus, what you have already studied in calculating the impairment loss, you calculate recoverable amount, which is greater of the value in use and the fair value discussed. So that value in use is the present value, you discount it. So this is the discounting that I am talking about. So that discounting is the present value. For asset we call it value in use, the central one. For liability we'll call it the fulfillment value. So let me sum it up. The thing is, the value that the asset carries based on its transaction date is the historical value. The value that the asset carries based on the reporting date could be 3, fair value, value in use, or the replacement cost. So standards, different standards will guide you or ask you to place the value as per the requirement of the standard. Like, let me talk about the very easy standard IAS 16, property, plant and equipment. But what does it say? You have 2 models with you for subsequent measurement. 1, keep on presenting the asset at historical cost minus accumulated depreciation. Second model is revaluation model, to remeasure the asset at fair value. It is not talking about rest of the values. In IAS 36, it talks about to calculate the value in use, the second one. In IAS 2, the net realizable value for the raw material inventory is replacement cost, the current cost. Current cost is also named as replacement cost. Okay. So it all depends which standard is asking you to measure the information in which methodology. Okay. Assalam.
शरीफ साहब से मिले
गले मिले ना।
अस्सलाम वालेकुम।